Hey guys, Mike here. So hope everybody's having a great weekend so far. Today we can answer all your questions about liquidity and also a lot of stocks you asked about like AMD, UNH, SOFI, CLS, and many others. So I'm going to try to get to all of them. Again, we'll set up the week to come in tomorrow's video. Obviously yesterday was an interesting day in the market for sure for a lot of stocks, a lot of risk off going on there. And other stocks getting rotated into. And boy, I mean, Dollar General, I don't know if they got a freaking, I was telling members like some kind of, I don't know, Sam Altman deal or something. That thing's trading like a tech stock right now. I'm hoping for a pullback, but not getting it so far. So yeah, staples are definitely getting moved into. Now, I did tell you I would go ahead and I went down this rabbit hole on data centers, okay? And the last 3 questions of the video is about me, so I'll answer those at the very end. One of them has to do with AI. But I went down this rabbit hole. We headed to Alabama for Thanksgiving. My wife likes to drive on the long trips. God bless her because I hate it. So I started just researching, right? And so here's what's happening. And I'm going to tell you what's happening. But what we're going to do is start off with one. Imagine living next to one of these, okay? And I'm going to show you, this is multiple data centers across the country in different places. Also, and when you hear these people talk, don't listen to the interview. Listen to what's going on behind them. And then there's 2. Imagine working in a data center. Oh, the noise is incredible. And then there's a video where they actually compared living, next to a data center, working in a data center, and then a neighborhood no data center, which is pretty cool. And then we're going to pick up on, like what's the issues that are happening? How are they getting these data centers put in? How are they getting approvals? Also a state that I think is the most obvious one to watch to see how it goes, because either the residents are screwed or, maybe the opposite. And so we're gonna find out, and I'll tell you why. But just imagine waking up to this right here. Look at this data center. Look at that big neighborhood. Because remember, what do they have to do? They have to build near something with a lot of land, huge water source, and a power grid to hook up to. So just listen to the noise of these things.
If it were like a highway that never stops. We talk about, you listen to Prince William County Parkway, you hear that during the day, but at nighttime, you clearly hear it go down in volume because there's not as much traffic.
You wake up with your ears ringing, a headache, nauseated, you don't sleep.
700 feet from the data center right here.
But these neighbors say not good enough to quiet the noise next door.
It's just really, really loud.
This Amazon Web Services data center and others in Northern Virginia.
And so remember some key points here. What's happening? What I found out was, remember, in the big beautiful bill, they tried to take states' rights away from regulating AI and also trying to really strip states and cities of rights to build, trying to fight these data centers coming in a way. And so, but that got taken out because we got found out about it from certain politicians and it got taken out. Very unpopular. But now, so what they do, they shifted. It's okay, send these lobbyists down to the local municipalities first and see if we can basically legally bribe them to allow us to put these data centers in. And so if the local municipality goes with it, that's great. If they don't, what they do is they just go to the state, the governor, everybody like that, senators and stuff, and say, hey, we need to get this done. And so they lobby them. And what happens? You end up, what they're doing is passing bills now in a lot of states, stripping the local municipalities of any power to stop these data centers from going in. Okay, that's one thing that's happening. 2, what's really crazy, and I'll go through the numbers for you. This shouldn't be no shock, but these data centers are coming in, and what they're doing with the power companies is the power companies are making deals with them to give them lower rates than the residents are actually going to have. And what happens to the residents is, remember, the power companies will get their money because the demand, and when I show you the amount of power these things use, it's unbelievable. I mean, just unbelievable. It's almost hard to fathom. But what they're doing is they're going to make their money. So what's happening is, because of this increased demand, which is a huge increase in demand, the residents are having to pay for this. So you imagine not using any more electricity, but you get charged more because that company, which is not only, you don't know, getting lower rates than you, also they're getting tax breaks, huge tax breaks. I mean, enormous tax breaks. Now, one thing they'll say and defend this, say, well, it's going to bring jobs. This is true in the short term because you have to construct the data center, and it takes a lot of construction workers. Some working local, some are going to have to come in, so have to stay at hotels, all this fun stuff, eat there. So, brings in money into the economy. Once that's gone, the jobs are non-existent. I mean, it makes no sense. Look at this right here. And this is common sense. A single data center typically employs a few dozen people ranging from about 20 to 80, unless it's one of these big hyperscalers. You can have up to 100 employees, maybe 125 I found. And it makes sense because it's a data center. People think it's some kind of Amazon fulfillment center that has like 2,000 employees. You need them there, but a data center, what is it? You're just sitting there with all these servers in there running, as you saw. And so what are you going to need? You're going to need guards to guard it. You're going to need some cleaners to keep everything clean. You're going to need a maintenance crew for sure, right? And then some other folks to come in there and make sure these things are running properly or fix them when they go down. But that's it. Like, it's not like an Amazon fulfillment center. And so it's a lot different than that. And so those jobs go away, and nobody really knows what the offset is because with all the tax breaks they're getting and all that, it's like, is it just going to be a switch? Or, we'll give you this, you give us that, but it's kind of a wash in the end. That's what, people don't know yet because this is really kind of a newer thing coming up the last like 5 years. And so we're going to have to see because you got a lot of data centers on the rise, which we're going to talk about. And don't think for a second it's not going to happen to you, because a lot of people who have no problem with this, you find out very quickly they aren't the ones living by the data centers. Like, they're way away. Like, I can't have a data center anywhere near me because of where I live, which is great, by the way. But I would feel sorry if, like, 10 miles down the road, they got a lot of land, water, and a power grid. So they could easily put one in that area. And I can promise you, those people aren't going to be happy, and I would feel bad for them for sure. I can't stop it for them. But I want you to look at these numbers. I mean, this is insane to me. So many data centers also require significant amounts of water to cool their servers. Large data centers consume 5 million gallons of water per day. And it's not just any kind of water. It's like drinking water, equivalent to the water use of a town of 10,000 to 50,000 people. That's nuts. Local leaders and advocates across the country are weighing the potential outcomes in their community. In August, Starwood Digital Ventures submitted plans to Newcastle County, Delaware, for a data center project that could consume as much power as 875,000 to almost 1 million homes, nearly twice the 449,000 housing units that exist in the state. And here's some upcoming data centers, just FYI. So in case you live here, Texas, we're going to talk about later. There's a bunch of them going to Texas, by the way. Pennsylvania, North Carolina, Louisiana, the list goes on and on. Mississippi, Ohio, Wisconsin, Ohio again, Lincoln right there. And of course, what's going to happen? This is, I mean, it's like a scientific experiment. Data centers consume vast amounts of electricity. In 2023, they accounted for 4.4% of all U.S. electricity usage, a figure projected to grow between 6.7 and 12% by 2028. What's the problem with that, of course? Data centers raise electricity bills due to increased demand and costs for grid upgrades, which are often passed on to consumers. National averages project 8% increase by 2030, but costs can be much higher. Right? In Virginia, bills jumped as much as 25%. Ohio is $15 a month. When you go over here, I knew it had to be higher in some areas. Like all data centers are sending power bills soaring. Wholesale electricity costs as much as 267% more than it did 5 years ago in areas near data centers. And if you're on fixed income, you're screwed, because like this gentleman here is on disability and his energy bills have gone up 80%, for crying out loud. Imagine being on a fixed income. You're not using any more, but it's going up because you live near a data center that wasn't there when you moved in, by the way. And so, it's going to be interesting to see, where this goes, because again, some people, some areas have a scarce water source, or just enough to get by. These things take up a crazy amount of water, the electricity. But just imagine that you wake up one day and you go, what is that right there? Oh, they're putting a data center. What? Like, you've been living there for years. Some people had their houses paid off. Now they can't sell their homes. They can't rent their homes. It's insane. I mean, that is, can you imagine that, working your whole life, retiring, you own the land underneath your feet. Oh, this is great. You have a great setup. And here comes this freaking data center, or of course the Bitcoin miners. And you're like, what? I can't even sell my home. They can't sell their homes. They can't rent them either, because would you rent or buy a home that was near something like that? No. And so, it's just a mess. But here's the state I think is the most interesting. It's going to be Texas. And the reason I say that is because their governor and senators and everybody else, I mean, they're on full board, right? They're taking all the lobbyist money on this one. And just, I mean, the reason why I say about Texas is because they have a very unique power grid, right? It's the largest isolated power grid there is, self-contained system. We've heard all about it on the news and stuff when they had the snowstorms, all that fun stuff. But here's another thing. When they have heat waves, just the miners, the Bitcoin miners, like Riot, for example, they have to pay them to shut down so people will have enough, power to run their ACs and stuff. And it ain't cheap. I mean, look at the millions of dollars Riot alone has absolutely raked in of taxpayer dollars to do this. Imagine when all these data centers go in, what's going to happen? And they got a bunch of large data centers going in from Google to Meta. I mean, it is a boatload. Now, Texas is huge. A lot of land. As far as I know, they got a lot of water. And of course, that power grid is going to be very unique because they can't like borrow easily from other states like I can here in Florida or Florida can. They can borrow from Georgia, Alabama, that kind of stuff if there's, because they got the capability to do it. And if you're from Texas, I definitely want to hear from you because, again, to me, it's a case study. You're just going to look at it and say, let's see how this works because we've seen Texas on the news because of their power grid. Let's see what happens and see if they got the power to actually be able to power these centers. And by the way, one thing I did learn studying about Texas, I do have family out there that have told me this before. And, you got people kind of say, wow, again, we can politicize anything. And they think, oh, well, alternative energy is only the liberal Democrats. It's like, oh, no. Texas is like number one, number two in alternative energy. They are number one in wind turbines. And I don't know what they are as far as solar, but overall, because they do what I say to do. What have I said? I told you guys. I think it's stupid to politicize it. Whatever you can need, use it. As long as it's legal. Here in Florida, we got a lot of solar panels because we can, but we can't have the wind turbines. We don't have any oil here in Florida, so can't do that. Can't frack. We end up ruining our water source, right? But Texas, they have have it all. They really do. So they have a good shot at powering all these, but at least they're smart enough to use it all too. All right, and I'd be like, it's just oil. They're using it all out there. So let's wait and see what happens. Let me know your opinion on that stuff. And again, as long as you don't have one coming in behind you, and there's maps you can look up to see if there's any plans to come in your area to do this, because some of you are going to wake up one day and go, what is that over there? Is that a Walmart? Nope, that's a data center. What? And so, yeah, and if that happens to you, you can just go, there goes sleep. That's for sure. So anyway, I want to put that out there to you. Now let's get started with all your questions here. You got some really good ones. First one here says from Rafi, question for Saturday's video, what do you think will happen December 19th when Japan increases rates? That's a great question. I was telling members about that. I have no clue. What I can do is look back at what happened when they raised rates the last 3 times. And you can see, this was March 2024, no problem there. This was July. We ended up dropping about 7%. I don't know if it's because of that or not. And then, of course, the last rate they did over here was in 2025 in January. Little dip there, went sideways, and then the market crashed. I don't think it had anything to do with that, of course. But I don't think it has to do with just the rate raise. It started the level. And I don't know enough about Japan's rates because they've held them like low for so long. I don't know what that level is. It's like over here when the 10-year or when the Fed funds rate starts going up and it gets to a certain level, that's when things are supposed to start breaking. So it usually happens or slowing down or the market pulls back, says, ooh, let me have a taper tantrum or whatever. But over there, don't forget, they're also doing stimulus at the same time. So, I don't know what that number is for the market to react. And that leads me into the next 2 questions, which kind of has something to do with this, which is, do you consider a liquidity injection into repo overnight lending to be QE? It seems much different to me, but maybe you could explain your thinking on this. I know the Fed is no longer rolling off the balance sheet, but aren't these actually 3 different things going on? QE, QT, and overnight discount window activity. Help me understand. Of course, the next one is QE started December 2nd. Where do you think liquidity will go and how can we track it? And so not only you got the Japan rate hike going on, you also got what we're doing over here, right? So you got the cuts going to happen, no doubt, and they'll probably continue to cut. And then you got the balance sheet stop rolling off and then they're reinvesting into short-term treasuries. At least that's what they said they're doing. And so then, of course, then you got what's going on in the repo market, which is trying to basically provide support into the banking market and stuff. So, that's what's going on. And so I don't know how the market's going to react to that kind of stuff. So it's a lot of stuff happening, right? And so to the question about the QE, 3 things going on, that's true. I don't consider the repo market to be exactly QE. Some people describe it as that, and they try to make a case for it, which, probably could. But then, of course, cutting rates is definitely that way. And then stop rolling off your balance sheet. And if they start buying back, especially bonds and stuff, that is definitely QE. I don't know when that part's going to happen. Because remember, 2010, 2020, why did the market do what it did? Because the Fed was the largest buyer of bonds and mortgage-backed securities. So they bought that, and all that liquidity that would have been going in that area went to the stock market. And we went, see you later. So the market looks at it as just a supportive area. Any little nickel dime they can get from it going, oh, they're going to be supportive? Yes, they're going to be supportive, okay? And so, again, they're not sending out checks or anything. Like this, when I say QE, it's literally the bond market. If they support the bond market, that's really good for the stock market, okay? But as I said, watch the 10-year Treasury yield, because what's it doing? It's going up, okay? Fed controls the saving rates. You might have got, your notice is saying we ain't going to pay you as much on your savings account, money markets, things of that nature. And the 10-year controls the borrowing rates, right? So for the mortgages and everything else, but it's starting to go back up. And so that's not good. That's why I said watch how the bond market reacts and stuff to this. That's what we got to find out. Now, next one says, can you cover AMD and UNH? I sure can. We'll try to get through these as fast as possible. And I'll keep it very simple. AMD, obviously, we know that it came down twice, held this trend line, got the bounce, broke this trend line back up. Now it's just sitting there holding, and I'll show you what it's holding on to. But it's a fib level. Plus, and we have the moving averages. You can see it's rejected the 50 now 3 times right there. So get above the 50, start heading up to the 50 fib at 230.47, up there at the golden pocket at 239.47. And then, of course, we break down below that trend line right there. That's not good. Probably going to come down, touch that 100 moving average. And if we break that, you got the big gap. So it's kind of somewhat no man's land, but slowly kind of tweaking up. Maybe you can call it consolidation, but it's just like a lot of stocks. Got to get above these moving averages right now. UNH, kind of an interesting one here. Again, another one, reject off the 50 moving average and the 0.5 fib, for example. But again, we talked about this one. It came down these anchor VWAPs. It held, got the bounce. Okay, so these are very powerful things to look at. Got above the 100 moving average right there. So it's wedged between the 100 and the 50 moving average right now. Really want to hold that support right there. If it does decide to come back down, that 50 is trying to flatten out the best it can. And so, I'll show you real quick what's going to be resistance up top right here. But first, when you look at this, I'll put a trend line here to see if we're going to hold this as I'm recording this today. Market's almost closed, so looks like it might hold that. But one big area of resistance is going to be that 200 moving average. If it breaks that 50, that 200 right around the 0.79 fib, around 362 right now. Again, it's a moving average, so it moves. But boy, that's going to be a major resistance. And remember, I told you up there, during extended hours, what happened? I said, well, I wonder if this is going to count as a rejection. Well, oh boy, it counted as a rejection. It hit that 200 moving average to the penny. And look what happened. See ya. I was going to say that's going to be major resistance. But if it gets above it, boy, watch out. All right, watch out. So that's UNH in a nutshell. SOFI, CLS, 2 very interesting ones here. Don't forget, SOFI did an offering last night. That's what dropped it. We thought right here, oh, look, it broke out. And then after hours, boom, see you later. So it dropped about 2.5%, but it got to the 0.5 fib to the penny and bounced and held so far. The question is that going to be enough, or do we need to come down to 100 in the golden pocket down there between 25, 26 bucks? We will find out for sure on Monday and Tuesday, I'm sure. But, pulling up a few other things, you can see clearly that would be support right there. There's a gap right there as well if you look to the left. And so you have all that going on. You also got an FEG, which I'll mark out for you. And so I think it's pretty simple on this one. I'm going to get rid of that trend line. Get above 28.16. We'll fill the rest of that gap right there because that gets you above the 50. So that would be a big, powerful thing. So I told you, a lot of these stocks are below the moving averages, but when you break above, it's usually a very powerful thing. You can see where it really loves its 50 moving average. You got multiple rejections there, multiple lines of support, also on the 50 moving average. And also you can see clearly, I'm going to mark this trend line right here out for you because we got to get above this as well. Get above that, start flagging, then you can break out to the upside and really, set your move. A lot of people have like a $45 price target on this thing for 2026. We're going to see if that's going to happen or not. But let's get above the 50 first. Let's hold the 100 down beneath as well. We'll mark out this FEG also, which lines up with the 100 because it could be a draw for it. Don't forget it searches out these fair value gaps like drugs or something. So it wants its fix. I think Monday and Tuesday will tell us a lot. CLS, I remember covering this one now. I definitely remember this. It's trend line. It broke it. It's rejected 1, 2, 3, 4 times. But, hadn't had a big drawdown or anything, which is a good one. We'll extend that out because we know that will definitely be resistance coming up. 50's held as support right now. multiple times. Didn't even touch the 100, as you can see. And you can see this one's been on a heater. I mean, boy, that thing's going straight up. Look at that. Holy moly. That's why I definitely remember this one. I also remember last time saying what I liked about it was it stair-stepped its way up, which is good. I like a lot of these parabolic moves we had on so many stocks. And this is very important. Why? It kept coming up, retesting these levels, retesting. And the reason why that was important, because right there, when it came down on this last drawdown, when it did break that trend line to the penny, it touched right there on that support level and bounced. Okay, so as multiple times it's touched that area, so that clearly is a support area at 261.19. Make sure you mark that out. This is another one to me. It's just wedging right here. And so it's going to keep getting tighter and tighter and tighter, and you're just looking for the break. This can go either way. Just FYI, it can go either way. You can probably draw that trend line, honestly, not even include the wick. I would just draw it from the 50, but you know, either way, it's just wedging. If it breaks the upside, you're going to all-time new highs, no doubt about that. If not, we're going to break the 50 and test that 261 area once again. So yeah, I remember that one. Congratulations on that one. Now, next one comes from one of the members. Can you cover AMT? I sure can. You look at this one, and this one's very interesting. It's always, to me, I love covering these stocks I don't know anything about, and you discover certain things. I mean, look at this thing. You can clearly see trends here, right? One, what's it doing? It's coming down in support. And so what I'm going to do is get rid of these major moving averages. We're going to bring that up later, but I'm going to bring up my 9 and 21 because if you know, as I was going through that, I thought, well, let's see what happens here. And you can see, don't get a lot of these crosses, right? But when it does, it has these nice moves. And you can go all the way to the right and see this, and it's coming into support again for the third time now. Does that mean it has to repeat itself? No, but you can clearly see when it gets that bullish 921 cross on the daily, like it usually has some pretty good upside. Again, that's not guaranteed, but we'll mark out the support. You can clearly see the support right here. It's coming in, it's got that bounce for the third time now, actually fourth time, if you look to the right there. And if it does happen, you can bring up the visible range volume profile on here and see exactly what a nice target would be. You'd have to get through also what would be a very heavy resistance. There, 194.57. All right, you can see that. So if this thing gets going, that's going to be huge resistance. If it gets above it, it can grind all the way to 220. When you bring up the momentum indicators on this thing, you can see they almost look pretty much identical, you know, where they're at when you look at this one. But again, MACD is below 0, RSI is below 50. So if the RSI can get above 50 on the daily, MACD, you already had the bullish cross. But if it gets above 0, then you're cooking with Crisco again, and you can see where your stop loss would be. It'd be right there at that support level. So that's what I would be doing. But anyway, not financial advice, but interesting stock chart. Now, next one says, can you cover ACN? And if it's doing anything interesting. I actually think this is doing something interesting, by the way. This has a trend line going back to 2002. So I know I've covered this before because I never forget a 23-year trend line right there. And when it breaks it, you get punished, just like Dollar General and many others. But what are you seeing? What I'm seeing is a rounding bottom and mitigating a weekly imbalance right there. And there's something else that it rejected off of, which we'll talk about in just a minute. But we've seen this pattern many times over, which they bring in that rounding bottom, and then you can clearly see a trend line right there where it breaks above, retest, and then starts to move. And then if you bring up the visible range volume profile, that kind of tells you right there where some heavy resistance will be when it comes up, which is just right above it. But again, I don't have to break through the what? I had to break through the 200 moving average to do it because they got rejected to the penny, which is normal. That first shot up, like you saw in UNH, when it gets hit, man, it's a hard rejection. Okay, I think you saw it on Meta recently. Now, Alan asked, can you cover Dutch Brothers? I sure can, but I'm going to keep it simple. This one's just wedging. See this right here? And it's got plenty of room to continue to wedge, as you can see. So it could head up to the top of the line or end up coming down to this bottom line, breaking down. If it breaks down through the bottom line, say hello to that gap fill down to the bottom. Breaks up to the top. You can clearly see where it's got to go, and we'll bring up the visible range volume profile. You can clearly see that is support it's at right now. It can gap up to 62.70, which meets that line right there. Breaks out of that, you can clearly see that once it gets above like 74, this thing can absolutely moon. Again, I'm not covering the company. I'm just covering the stock chart itself. I see they don't have earnings till March, so I don't see any kind of catalyst or anything going on. So this could continue just to wedge right there in that area. You just don't want to break 46.99. That would be horrific. And so that's the levels I would watch for on Dutch Brothers. And of course, what do you got to get above? The 200. That's why I got rejected so hard where it's at. It's below the 100 as well. So, 50's trying to curl up. Looks a lot like the last chart almost, right? So you can see where it really, really respects these moving averages, especially the 200 right there, how it will support. And so that is a big one. So if it reclaims the 200, that's huge. If it can't, not good at all. Palantir, this is another one. We'll keep it very simple. We talked about it. Big move up, almost straight up. And it's just been mitigating these imbalances we put in there for you. So it mitigated 1, 2, has 2 more above. One's a FEG, fair value gap or imbalance. The other one's the gap. And like we talked about, 190 is the key. And I'm not calling for this. This is what everybody in the mother's calling for. Everybody's watching to see if this is going to be a head and shoulders, which is a topping pattern around the 190 area. Okay, so it would mitigate the next imbalance. It'd be up there right between the golden pocket and the 0.79 fib. And so let's see if that happens. You can see right down below it too. I forgot to mark this now, but this was another level of liquidity it already took down below it right there. So if you get a pullback, look for that area to bounce from. If we finally do get a pullback around that 170, 150 area right there. So hopefully that helps. Now, next one here comes Dr. Marcus. Actually, maybe the next two. A bit of along the lines of the future of our youth and how AI is going to cause a lot of job loss. If you were king of the world and had the ability to shut it off for good, would you, or do you believe in the long run, like the internet, it will provide a net positive? And my family and I were actually discussing this last night around the dinner table, and my wife and I think we both agree, like, I wouldn't shut it down. I would run it much differently. And that's why if you listen, to these executives talking, especially the ones that have left the companies or even the CEOs, like, they're warning us for a reason. And they're not even going 10 years out. They're going like 2 years out. And the reason why, I should have probably said this in the beginning of the video, we weren't talking about AI, we're talking about data centers, but you're seeing the same thing in data centers too, which is, remember, they have gutted the EPA. And what's shocking these executives are how easy it is and how fast it's moving. Because normally you would have, a slowdown of this. You have to get permits, you get this, get that, da, da, da. And right now, they say it's like the OK Corral. They just, whatever they want to do, they can do. Because they have literally just legally bought all these politicians off from the top all the way down to the bottom. And they're able to do whatever they want to do. And thank God that big, beautiful bill didn't have, that stuff got taken out of the big, beautiful bill. But you see what they're trying to do. There's a reason why they're trying to strip the states of the rights to regulate this, because they know there's being a lot of pushback, right? So because they know what this is, it's like one of the first or the most powerful technology we've ever come up with to replace us. I mean, there's a reason why they're coming up with companions, and people are literally doing this. And so my wife and I were talking about it, and do I think there could be great things with AI? Absolutely. But the one thing we've got to all learn, right, about human nature, what can be good is usually turned horrific. I mean, look at our healthcare system. That's a prime example. Only for-profit healthcare system in the world. I mean, seriously, it does do great things, sure, but it could be so much better, right? But greed runs it. Greed is going to run AI, unfortunately, and that's just the way it is. I mean, look at OpenAI. They're getting into, I'm not going to say the word, but it's stuff that's getting outlawed in other states right now that, you hope you don't walk in the room and find your kid watching it. Wink, wink. You know what I mean? I mean, they're going into that. It's like, really? What does that do for human society? You're going into, this area over here that you shouldn't be in, creating human companions and stuff. And, I'm like, yeah, could it, solve the cure for cancer? Yeah, I think it could. I think it'll solve a lot of that stuff. But guess what? That don't make money. So they're probably not going to do that. And this, I wouldn't shut it down, but I would slow it down tremendously, because it is moving at, these neck-breaking speeds right now. And because the politicians are just like, whatever you want to do, just do it. And it's like, no, no, that's not good. And so, and this country's going to be, it's going to be like a scientific experiment, because other countries aren't doing this. I'm telling you, it's China, America, and then everybody else falls way off. I mean, for like data centers, we have over half the data centers in the whole world. Okay, I don't know how much China has. But again, I think if you go to Portugal and all these different European countries, it'd be way different. And I look at what the internet did, and cell phones, as far as like human contact, it's almost non-existent compared to what it was 25, 30 years ago. You know what I'm saying? And so that's what really bothered my wife. She's like, man, if you thought we didn't have, we thought we were drifting away from each other as humans before, this stuff right here is going to be much worse. And so I think it do great things, but I got a feeling we're going to look back 20 years from now and go, man, saw that one coming. I mean, especially actually for our children. That's what worries more than anything else, our children and the job force. Like to go, people can say, yeah, just tell them to go be an electrician. Dude, I mean, that's like insulting. That's like saying anybody can be an electrician. I'm colorblind. You want a colorblind guy coming into your house trying to be an electrician? But that's like what you're doing now is it's already bad enough to go be forced. Imagine being forced to do a job you don't want to do. Everybody don't want to be an electrician. Everybody don't want to be a plumber. It's great jobs, pays great. You know what I'm saying? But I met some pretty miserable electricians in my life, and I met some pretty happy ones. But I don't want to be forced into that because you took all the other options away. You know what I'm saying? Great to want to be a doctor. That's like saying anybody can be a doctor. No, you can't. No, you can't. Not just anybody can be a doctor. Not just anybody can be a lawyer. You know what I'm saying? So it's kind of crazy for people to put that out there and go, just go do this. Go be a trader. If everybody could be a trader, everybody would be a trader. You know what I'm saying? It just doesn't work that way. And so, and to take away the options from all these younger people like that, just because we invent this technology, go, oh, well, it is what it is. That kind of sucks. You know what I'm saying? But that's kind of the society we are, where it's like, if it don't harm me, whatever, it is what it is. So anyway, that's hopefully a short enough answer on that one. Last one here, also from Dr. Marcus, says, you said in a previous video passively that you were working on 2 books. What are the 2 books going to be about, and when will they be available? The answer is I have no idea when they're going to be available because, like I said, being an author is something I've never tried. And one thing I've learned now is I understand why these authors go rent cabins and hotels or just go away and get away from people, because it is hard to write when you're not in a rhythm. Like my wife went to go visit her family like probably 2 months ago, and I stayed home just for that reason. And I got so much done in that 2 days. It was crazy. I mean, so that's what I need to force myself to go literally rent a hotel or a cabin or something for the weekend, because I'm pretty fast at doing stuff, and just try to knock it out. And I literally wrote that, and then I had to go back and rewrite a whole bunch of it. So I'm not the greatest writer to begin with, that kind of stuff. But it's going to be on finance. I mean, literally my first book, I wasn't making 1 big book. Now I'm going with 2 books. That's why I said 2. Is because like from age like probably like 7 to 17, I'm gonna have a book for there, not just with the stock market, but with all kinds of stuff, building credit as a teenager, all kinds of crazy mess. All right, which I'm researching now. Just kind of help parents who aren't financially educated, do this. And again, I'm discovering, learning things too, because I'm gonna use this for my son as well, as you know. And then the other one's gonna break it down to where it's 18 forward and really breaking down this crap you learn in school about finance, which is ridiculous. Actually what runs the stock market, how to spot it, how to track it, how to use it, and then go from there as far as investing, blah, blah, blah. But I think just really understanding the same way I invented this channel for, being able to pull back the curtain and go, oh, this is how this works. That's where the wizard is. You know what I'm saying? And so that's what I'm going to do for that one. So when people get out, they want to know at a young age, start early and all this stuff. And I mean, it's going to be, we'll see how it goes, but that's what it's going to be on, right? And again, I always said the greatest thrill I could have is to get an email, if those books ever come out and somebody buys them, is to get like an email or something from some person who bought it at 18 or their parents bought it for them at 16. And then, 15 years later saying, man, I just retired because my parents bought these books for me. I just read them, and boom, use some of the stuff you talked about. And thank you so much. Like that will be like the creme de la creme for me. I'm a simple guy. So anyway, appreciate all the questions, guys. Please hit that like, subscribe button on your way out. As usual, think about signing up for the membership, like the McDonald's combo. That's everything you get with it. Just hit the first link down the bottom. And I will see you guys tomorrow to set up the week.